as we get into the festive season, and the stocking hasn't been as good as it has been in the previous year. So I don't think they're expecting Diwali to be all that hot. But while you can say that the GDP is a backward-looking number, and it is, for it to get progressively better looking, the news flow has to look better. And I think in this quarter, the commentary around auto, if anything, has gotten worse rather than better. And now, I think you're in a bit of a dichotomy where the economy is in real trouble. But on the other side, if you look at what the ECB has done overnight, and the kind of noises that the US president is making about where he wants to see interest rates by the end of the year as they get into election year. So I think it's very possible that once again you get into a situation where liquidity overrides fundamentals, and it's possible that the market continues to inch higher, not run away higher.
But you think Rahul, sorry to interrupt you, do you think it's a self-fulfilling prophecy right now? I mean, fear feeding itself? Because if you look at the auto stocks, they're all up 20% from their lows. You think most of the price damage is done? I
think, Sonia, the damage was so excessive. I mean, if you just, as a case in point, if you look at where Aisha was at its 52-week high, there was still, most of the people had buy recommendations on Aisha. Even Maruti at 11,000, it was pretty much a consensus buy. So the price damage that's been done, I mean, it's akin to pharma, so if you tell somebody who's bought Dr. Reddy's at 3,500, 4,000 that the stock's gone from 1,800 to 2,800, he may not feel all that good. I mean, it's moving in that direction. So I think it's a little bit of, it's good that it's happened. I think a lot of it was fueled by, some remarks given by the transportation minister about GST and the presentation he had made to the finance minister. And just a couple of days back, the auto stocks were on fire subsequent to that. But,
You're still
not yet. I think there's enough value and more in the markets outside the auto sector where you can probably take a reasonable bet on earnings. I think they may not be cheap, but you may not have the risk of losing principal, which I think is still existent in the auto stocks.
So again, I mean, so auto versus the rest, let's just take that to 10 stocks, 10 large stocks as compared to the broader mid caps and small caps. Do you think for the rest of the year we'll have people hiding in these 10 stocks, or action will spread to mid and small caps?
See, Prashant, it's all contingent about how the liquidity cycle plays out from here. I mean, $20 billion a month is no mean feat by the ECB, and if the US decides to, respond to that and India, follow suit, then the game changes. But ceteris paribus, as we stand today, I think you're probably better off playing the large caps. I think there is still a little more predictability in names like maybe an ICICI Bank or some of the larger pharma names, like a Cipla or an Aurobindo, where I'll probably have a little more comfort. We were just discussing Nestle. I mean, it's obscene to put a 70 times multiple to justify a buy on Nestle, but I know that there will not be any material capital erosion. So I know there was a bit of correction in the last bout in the HDFC twins and the Bajaj twins on the financial side, but I still think that incremental money will probably be there, because I think it's not so much about stock price appreciation from here as it is about capital protection. And I think, there is a fear, a genuine fear that there could be another retest on the way down. To what extent, I don't know. It could probably head down to 10.5. If that happens, the pain in the broader markets will obviously be that much more. But that being said, I mean, if you look at, so you're at 11,000 on the Nifty. I think maybe 12 or 14 stocks are probably at 12,000 Nifty. And I think the balance 35, 38 stocks are already at a 10,000 Nifty.
That's why I said 10 stocks.
So exactly. So I think that's the kind of bipolarity. And if you do a weighted average, you probably get that 11,000. My sense is if liquidity comes in, it's probably going to, as they say in Hindi, Mulla ki daur masjid. So it is what you know. So you buy that. There is some amount of safety in it. And I think that will probably continue in terms of the outperformance.
If foreign flow picks up, I mean, they usually go with large caps, right? I mean, it's the local guys who go bottom up, mid caps, small caps, and that kind of action. What we saw between, say, 2014 and 2017.
More so between 2016 and 18, Prashant, because I think demonetization changed the game totally. I mean, if you just look at the equity assets under management of all the mutual funds in India, they've grown anywhere between 3x to 10x. I mean, HDFC Mutual Fund is a classical example. Just before demonetization, their equity assets under management was about 45-50,000 crores. They're touching 2 lakh crores. ICICI Prudential. Some names like Axis that were in 4 digits are now, touching almost at 1 lakh crores. So you're obviously, the locals are going to probably go out and look at more mid and small cap opportunities. There have not been too many India dedicated funds that have opened up over the last 10 years actually. Since the global financial crisis, you haven't heard of too many India. It's still an allocation of GEM funds or global allocation that you get. Recently I was just talking to a fund manager sitting out of London, and he was saying his exposure to India is only $330 million. So I think to that extent, you're right, because if the exposure to India is just about $1 billion, give or take, you're probably going to be more comfortable sleeping better owning large cap names. And, I think one of the themes that's emerged in a pretty significant way is life insurance. And the way, the life insurance stocks have done is quite phenomenal in India.
The other space that has emerged out of nowhere, I mean, of course, a lot of people saw it coming, is this whole hospitals and healthcare space, right? Every stock, whether it's Apollo Hospitals, whether it's Metropolis, Narayana Health, all doing exceptionally well, so many at 52-week highs. Is this a space that you track or you like, and what is in it for investors?
It's not something we track, but again, it's not something I'm surprised with, because it probably ties in with insurance in terms of underpenetration and growth opportunities. I think that pharma and hospitality, in fact, I've been having this debate with my head of research about whether we should initiate on this sector at all, and I think he's fairly convinced on it, but probably in the not too distant future. But I think it's a very similar story to insurance, where I don't know the valuations, but if they're not that expensive, I think the growth potential is still huge. But if you want to play the underpenetration story, like I said, it's life insurance and maybe even asset management companies, like now you have HDFC and Reliance that are listed.
Valuations are completely out of whack, right?
It's the same, Prashant. I mean, in our case, we're expecting the growth numbers of SBI Life, for example, to be better than HDFC Life. But sometimes,
No, sorry, I was talking about AMCs.
Exactly, but I'm saying in terms of parentage, sometimes that does play a difference. I mean, if you take HDFC Limited or HDFC Bank, HDFC Life Insurance, so I think at some stage the parentage of the group does matter, but actually we are in the process of initiating on that sector, so I don't know exactly what the valuations are, but you're right, I don't think
because for asset management companies globally, fees are coming down, right? It's a secular decline across the board. That same thing will happen here as well.
Nobody would know that more than people in our industry, because when I got empaneled with a lot of these funds, they were paying me about 25 basis points a transaction, and then pretty much overnight we came down to 10 to 12. In fact, some asset management companies have dropped down to 8 basis points, Prashant. So it's
and you only make money on equity, not debt. I mean, debt
absolutely.
So then I think people are betting on inflows being much.
They have to be, because just to give you an example, I mean, I have to just make a gross commission of 2 lakh rupees, I have to do a turnover of 20 crores on a stock, and even after that I'm paying about 30% in taxes, so I'm probably netting on a 20 crore transaction only 1,40,000. So, and a lot of that has to do with the cost structures that you're talking about. So I don't know where the brokerage model is headed, because it has to be a function of volumes at the end of the day. The more volumes you are, the better it is. But I think you're right that asset management in terms of the cost structures are coming down. So I think the people who are managing their cost structures better, definitely. I mean, HDFC is a case in point.
Okay, I just want to mention that you were talking about the valuation of some of these healthcare stocks. Narayana Health is actually trading at 30 times forward. I don't know how you would look at that, because the EPS for FY21 is about 9 rupees or so, and Dr. Lal Pathlabs as well, somewhere around that level. Is it too expensive?
So I would probably look at it, I would assume that people are looking at it as a consumer play. I would think as a quasi-consumer play.
Dr. Lal's is actually at 37 times.
I wouldn't be surprised. So if you look at it as a quasi-consumer play, because it is something that you can get with reasonable predictability of earnings, you could estimate cash flows with a reasonable amount of certainty. It doesn't surprise me. I think pharma is a totally different ball game. When you're talking about US FDA, the generic story in India, the Prime Minister has...
higher there,
So exactly. The Prime Minister himself is talking about, lowering the price of drugs in India. So there are domestic as well as global risks, but I think there is a consumer angle to the hospitality the hospital sector, where I think people may not be too fussed about offering FMCG kind of valuations. There are FMCG stocks like a Whirlpool or a Jubilant Foodworks or maybe a United Spirits are trading at around that 35 times, give or take. If you have a similar view, I'm not entirely surprised. But to specifically comment on whether these valuations are justified, I don't know. But it doesn't surprise me if they are there.
Rahul, thanks very much for dropping by. Appreciate you joining in with that perspective and those thoughts. 15 points lower on the Nifty, 10,967 is where we find ourselves at. The Bank Nifty is down about 1/3%, and across the board, I mean, there is just not a slide, but just sideways kind of action. 854 stocks are lower, 792 stocks are higher. So things there have also turned a bit red. We take a very quick break here. Up next, we put the spotlight on the big story of the day. Altico, which is a housing